Good day. Ira Epstein of Linn & Associates with your SPDR ETF wrap-up, and this wrap-up is for Thursday, July 15th, 2021, and the time 6 p.m. Start off with an announcement. This will be your last video update from me for another week. So I'm leaving town on my vacation, and I will be back a week from Monday putting these out for you. We'll put a notice up there on YouTube and the other areas for you to look at them. Not disappearing, but I want my 5 days of rest. And I'd like not to think about the markets much while I go away. Cleaning the brain is always a very good thing, and I want to do that. So speaking of cleaning the brain, I watched the Fed chair talk today again, and he saying the same things that he said. Number one, there's a lot of unknowns about a pandemic. He does not believe inflation is going to stick. He agrees that if labor inflation goes up, that will. He was questioned again on mortgage-backed securities. So, if you got to throw a bone out there, what are you going to do? You'll stop tapering. You'll start the tapering process by not buying those particular securities, probably. They were asked so many questions about it. It's an easy give. But remember, tapering is not buying. It's just buying less. People forget that. So the Fed is not of the opinion that the economy doesn't need help. It's of the opinion that until it knows the economy doesn't need help, it's offering that help. And they expected inflation. He said it ran a bit hotter than they thought, but they have watched other models of other places and they think they're on the right track. But at the end of the day, nobody knows. We'll find out. I'm of the opinion, I've seen lumber prices fall, and then tonight there's a pork report out. Now, don't laugh at that. China is one of the world's largest importers of pork. They lost much of their herd due to the African swine fever. They've rebuilt it, and their ministry today came out and said they've rebuilt it to the point where their domestic pork prices have fallen 50% this year. U.S. prices went up 25%, and the ministry sees a huge drop from China, at least, in the buying of U.S. pork between July and December of this year. Let's notch that one. That'll probably happen and take prices down. Lumber, we've seen that already. There's plenty of markets that are backing off, is what I'm telling you. You've taken $1 a bushel off corn and soybeans. They're still up. No question about that. But they're not running as hot as they were, and I don't believe used car prices will stay like this once all the factories get the chips they need. I think that's just a problem waiting for people. At the end of the day, they're buying a used car, and it'll go back to the same metric. When we go to ARK, we see that the market coming down. I had told you about this. We've talked about it the past few days. Trend down, bias down. The market had stopped yesterday right here, and what did I say? I said, if it stops there, what we have to look next at is where are the Bollinger Bands. Here's where you came in. You tell me. And you hit it, and you stopped. I'm now of the opinion, right there, with an oversold condition, this is where the pros are coming out of this market, on the short side. So the drive down completed a count. I don't know if it'll go further or not really interested. What I teach is the first time you hit a Bollinger Band after you get a downtrend, and there were chances to get short in here without any question about that I would be looking first for this combination and then the next one. Whole thing's been hit. Whatever it does, it does. There's certainly no reason to be short right now, but I don't see any reason to be long. GameStop. Not doing very well. It didn't hold all of this. Just hearing, and you got to admit that, just hearing that now you're going to have Netflix coming eventually into the space. It's not going to happen tomorrow. They're looking at it. It's probably a good year away before they come. But the market looks at the future. Would you be selling under a Bollinger Band? I don't think so, but something else is happening. What if you embed here? Embed means that you get 3 days in a row minimum where both numbers are under the 20 level. Could happen tomorrow. Then on the rallies, you're looking to sell as long, and that's what I teach at least, as long as the red line stays under the 20 level. Pave, doing just what I thought. Came back to the 100-day average, then bounced to the 18 again. That's what you're stuck in. Now Chuck Schumer has said He gives the market just another week or so. If they're going to do anything with an agreement between the Republicans and the Democrats, it gets done. Or otherwise, I guess he's going his own way with it. Okay, I don't think he's going to get it passed. AMC, a bounce back into the Bollinger Band, but certainly nothing friendly. And like GameStop, it could easily embed as well and get more bearish. Semiconductors, what do you do the first time you get down to a Bollinger Band? In unison, I teach you cover shorts. And you got right down there, you went to 179.01. The number was 179.22, and you finished at 180.86. That doesn't mean you can't go lower. But the gravy's been taken out of the market in most cases. Are there cases where it's not? Of course. But if you play for those, it's like saying, I'm going to go to that slot machine and I'll put in $1,000 worth of it, I'll win. Oh, yeah? You might win once, go back there with another 1,000. You're not going to win. I mean, just the way that it works. The house has taken their percentage on you. Understand the game. It's all a matter of that random luck when those numbers are going to spit out. Well, in here, it's not random. Here, when you're under a Bollinger Band, the math is you're only going to stay under it 5% of the time. PODX is in trouble. It's got an embedded reading that's bearish as can be, so these rallies are getting sold. I've been saying that here over and over, and now you've got a new low for the move. Till that embedded reading is lost, I'm very much in the bear camp. ESGU, guess what? Closed under 80. So if you're not up strong on the early prints in the morning, I bet the pros come out of this. They'll be looking maybe for that 18-day average right there. You've got to be up strong. That's what I'd say. XLE, the energy sector. I was looking for a pullback to, and you know we were talking about it, to the Bollinger Band. You got it both. You were here, trend down. If the market's going to break, I'm looking for the combination of the Bollinger Band, the 100-day average. You got to it all yesterday. Today's just a gravy day. You're too oversold in that market to get me excited. Emerging markets, lower highs, lower lows. As I see it, the pros are still going to be selling. The 18-day average with stops over the rally here, high of 79.83. So we'll see what they do with it. If it gets down here at the Bollinger Band of the 100-day average, I don't think the pros will continue with that idea, that have already hit a target. GLD, I'm in a resistance area. When I say me, the chart is in a resistance area, but I'm the one discussing it with you. And I'm there in terms of the 200-day average in the upper Bollinger Band in an overbought market. I like gold. I like that the Fed wants to let inflation run. I like that interest rates are dropping, not going up. That's not its enemy. I don't see the chart pattern there to get involved. Gold miners. This is a little stronger, at least, that it's got higher lows, higher highs. But now 3 days in a row, it is fighting at that upper Bollinger Band. Let's assume it can get through it. Well, then your next resistance is 35.24, which is the 100-day average, then the 200-day. And you got to do that all while you're overbought. Bye-bye. I'll let somebody else play that game. TLT, overbought, no trend, you play it. The 200-day average, that's your first resistance, Bollinger Band the second. I don't see anything of interest there. And in the euro currency, it's bearish, but look at how oversold it is. It's not even trying to embed. I don't see anything there at all. Remember that even when I go on vacation, I put out for my paid subscribers videos. So they still get it. They're going to see what I see. I don't put them out, admittedly, at the early hour that I normally get up, but I'm going to put out what they want. Example, you're not going to get a video from me tomorrow on this free stuff. They're getting their video tomorrow that will cover all the weekend markets for them, what I think the longer-term traders do, and so on. Is it expensive, folks? It's $8.95. Contribute to the program, give it a try. I cover all that for you, and you're getting 6 videos on ETFs and spiders a week. So, if I go on vacation, maybe I'll take a day or two off. I rarely do. I'd have to be taking a side trip from where I'm going, which can happen, and then I'm not going to get to it. But most of the time, I'm getting to it. Ask the people when I went to Mexico. They didn't miss a heartbeat. So that's how I work it. In the meantime, since I'm going away, I wish all of you the very best. I'll see you a week from Monday.